Hey, didn't see you there. Hey everyone, thank you for all the love on this channel. I love making this show and I want to set up the next episode. About 10 years ago, I quit my job at Universal Pictures to do my startup, this little production company, so I could make shows like this for people like you. At the time, I needed money for lights and camera and action, so I went to my local bank and applied for a small business loan. I was quickly denied. And so I went to the next bank and the next bank and the next bank and the credit union and the other bank, and everyone who said that they were the bank for me turned me down quickly. And I never really could figure out why. So this time around, what I thought I would do is cast a net far and wide to all those financial institutions and lenders out there to have them pitch me on a story about why they think they are the lender for people like us. Now to clarify, I am not in the market for money. I don't need a bank loan. Please don't send me your stuff. This is, to take you behind the brand and give you all the top secrets if you want to know about borrowing money. I got about 1,000 replies back, and from those replies I whittled it down to about the best 100. And then from those 100 I picked one, a little challenger brand out of San Diego called Reliant Funding, run by a guy named Adam. Now I didn't pick Adam because he was the biggest or most famous. I picked him because he was one of the few that was willing to tell me the truth, to tell me the ins and outs, all the secrets that I wanted to know about lending. He also seemed very creative and someone who's in the trenches just like you and me. I hope you love this next episode. Let's check it out.
I've gone through all these cycles, right? I've battled the difficulty of starting a business. I've gone through a divorce. I've lost a parent. Like all of these times, they're dark times. But it caused a lot of introspection and a lot of thought into how do I go from where I am right now to where I hope to be. And I've discovered it's a lot of how I frame my environment and what I do about it.
This episode is brought to you by our friends at Mazda. I just drove the new Mazda 6 and it's buttery smooth, powerful with an optional turbocharged engine and more. I also like the new CX-9. We shoot on location every week and it's got plenty of room for all of our gear. It definitely feels like a premium kind of driving experience, but it's the attention to detail that stands out for me. You can really tell the Mazda designers have put their heart and souls into these vehicles. You can check them out at mazdausa.com. All right, now let's get into our episode.
My name is Adam Stettner, founder and CEO of Reliant Funding, and you're watching Behind the Brand with Brian Elliott.
Hey, I'm Brian Elliott. Welcome to another edition of Behind the Brand. Well, I usually ask my guests, how'd you get this job?
It's a great question. I created it. So I was in the student loan business, and that industry in the financial meltdown, 2007, 2008, essentially went away. And I was in a tough spot, either go out and find a job or create one. I've always liked to try things. Even as a child, I rode motorized dirt bikes as a kid, and my father convinced me to give it a shot. The idea, I didn't even know how to ride a bicycle when I got on my first dirt bike. And before long, I was jumping things I shouldn't have been jumping and going faster than I should have been going. But always studying the best technique. I always wanted to be better at whatever I was trying to do. I mean, really, I wanted to be the best. Even when I knew I couldn't be the best, I was still trying to be the best. But risk taker, right? I'll take the chance. So with work, I felt like I'd achieved a lot in a short time. In hindsight, it would have been better if I stuck around a little bit longer. There was more to learn, of course.
I mean, part of this story is really about me talking to you, the financial expert, about how small businesses and entrepreneurs can succeed. I want to talk about the obstacles that stand in their way and some of the reasons why they fail. I mean, you're in the trenches right now working with them, helping them from a financial standpoint now, but I think that's a really important lesson that we talk about is I think when people think about quitting their day job and getting into this, whether it's solopreneur or entrepreneur business, starting a small business, whatever, they think about risks and, they take risks, and maybe some of the people who are failing are not thinking about, being able to come back and play again. They're taking these risks, like jumping out of an airplane without the parachute. You can't survive that one, no. Right? You want to have some contingencies. So, please continue that story. I love the evolution.
So, well, I mean, I'll go then from the Wall Street job I had lived, born and raised in New York, in and around New York City, and I lived at that point in New York for 32 years. And another change I wanted to make, and it was a bit of a risk, was to move. My entire network was in New York and New York City. But I wanted something different. And so the chance that I took was to move myself. At the time I was married, I had one child, to just pick up and go. But to your point, I made a list of 5 cities, right? And the pros and cons of each, and I balanced them out. And then I visited each of those 5 cities, and in each city, I went on a job interview, I went out to dinner alone, people watched, and then I did something of cultural significance in that city.
And so how did you arrive now at RF?
So Reliant Funding, when I moved to San Diego, I took a job in the student loan business. And it was, for me, ideal because it married what I learned about corporate at the apparel business with a lot of the finance and analytics that I learned on Wall Street. So when I was looking for my next position, that's exactly what I wanted to do, right? Continue to learn, but marry what I had done already and evolve it to the next place.
I'm curious, did you have good bosses? I mean, you worked for someone else. You worked for the man.
Yes, I did. I would never disparage anyone that I work for. I would tell you that the person that I worked for in student loans was an amazing mentor and the best boss of all the bosses I've had. When I moved out here, he said, look, I like you a lot. I like your energy. I like your intellect. I like your experience. I have no idea what to do with you, is what he said. But I hire good people, and I think that you might be good. But it's going to be on you to create value for me. That in itself, again, a little intimidating, a little scary, but I wanted that challenge, so I took it. And I believed I could deliver for him. But a lot of autonomy. I had to find my own way, and that was really the beginnings of the entrepreneurial drive. Because although, as you say, I was working for someone else, working for the man, I was given enough freedom to either really fly or drive off a cliff. It was either going to work or it wasn't, and it was on me.
Yeah, what I wanted to ask too, because I think it's important, you know, some people, you know, it's just not in them or in their DNA to go out on their own, and that's perfectly fine, you know. And maybe some of these people are managing people, and so I wanted to kind of maybe draw out some of these qualities or maybe some key lessons you learned from some of your good bosses or mentors over the years. So it sounds like one of them was autonomy, getting you to think, putting the onus on you, right, to prove yourself and be great. What are some other things you can think of?
Yeah, well, I mean, that's a big one. I mean, what he really said, if he could identify good talent, he didn't want to stifle that talent by putting them inside of a box. So instead, what he would do is let them soar, but with his tutelage or his guidance. And that worked great for me. Now, prior to that, I did well in my prior jobs. The managers or the bosses or the CEOs that I had were very different. And I didn't do as well under them as I did under the person that gave me freedom. He also pushed me hard. I'm very hard on myself, and I always want more. And so as entrepreneurs that may be watching your show, think about, first, if they work for someone else and they want to spin off on their own, I found it very helpful to try to create under someone else's umbrella. Again, that risk versus reward mentality is, how can I begin to take some of this risk and see some of the reward without taking all of the risk on myself?
Yeah, you're really closing the chasm, you know, making it more of a gap. So it's not this huge leap, it's more of a little hop.
That's exactly right. And it was intentional, and I shared that with him, that one day I hope to be in his shoes. And I asked him if he could help get me there. That I would never leave him high and dry, but that this was the path that I wanted to go on. I was creating a new life for myself on the West Coast. I wanted to do right by him and create something for him, but I wanted to get closer to my ultimate goal, which was, I didn't know what I wanted to do, but I knew I wanted to do something for myself.
So what did you start with? What kind of money investment did you need to start your business?
The second student loan business. So the first time I went out on my own, we started with a low 7-figure investment. Now remember, I had a really big track record. You know, 15 billion in originations in a student loan business is pretty solid. And the economy was amazing at that time. So raising the money with that track record in a good economy, I don't want to say it was easy because it wasn't, but raising that kind of money, it wasn't an insurmountable task. And so that's what we did. Now, when you're putting money like that out, you need assets on your balance sheet. It required a big raise. And so we did that. And again, 3 months in, I found myself going from what felt like hero to zero. It was an incredible blow to my ego and my pride. A lot of, and as I'm sure is true for the people that watch your program, a lot of our sense of self and self-esteem come from how we feel we're doing. Not just on a monetary basis, but our productivity.
Well, yeah, and this was totally new. Like, I know exactly where I was in 2007 going into 2008. I started this production company. I unplugged from the studios, and I was really excited to start this new venture. And then the floor dropped out, and the ceiling fell on me.
Yes, exactly.
And everything changed. I mean, it was like I'd never experienced before. It was totally different.
Yeah, it was. It was a tough transition. And I found myself at this crossroad of, because I was limping along and I knew it was time. Now, this company that I had started might survive, but it wasn't going in any form or fashion. It wasn't going to turn into what I wanted or needed it to turn into to feel satisfied and fulfilled. And now I had three kids, a mortgage, a wife again at the time, and a lot to support, a tremendous amount of pressure. And so I was at this fork in the road of, while I have fiduciary responsibility to do everything I can for that business, and I did, it was go work for someone else or branch off again and try to create something else. And what I found was there was an opportunity in every tragedy or failure. There's an opportunity. There's a lesson, and there's something that you can then go do from that low point, right? I always say, if this is where I am at my low point and this is where I want to go, it's on me to connect those two dots. It may not be a straight line, it may be a bumpy road, but I'm going to figure it out. And so what I figured was, with all of these assets created into the billions, and the banks had made a ton of money on me, and I couldn't get them to return my call.
We're talking about the big guys.
The big guys, the banks. I won't name them, but
You know who they are.
Yes. The money center banks that we all know, that we likely bank with.
Yeah, and I'm not going to mention their names, but all of those banks turned me down too at that same time period when I was trying to gear up and get film, camera equipment and lights and the sound and all this stuff. I had the same problem. I went to all the usual suspects. The bank I'd been banking with for 15 years, and then their competitor, and then their competitor, and even the smaller tier local banks, credit unions, everyone said no.
Right.
It was just, the timing wasn't right.
It's not a question of if a business is going to need money. It's a question of when they're going to need money. So when I needed the banks, and they were always there for me when it worked for them, even though my model didn't change, when it stopped working for them, they were no longer accessible to me. And so what I came to discover is that even in a normalized economy, the banks aren't there for 80% of small business. And so the light bulb went off that if I couldn't get money and he couldn't get money to buy salmon and produce, this was likely occurring all across America. And so I immediately came back to my office and started doing research on small business, their need for finance, and again, weighing that risk reward. Is this an opportunity or is it just an idea?
Let's shift over into what you think some of the biggest mistakes small businesses and entrepreneurs make. And I want to create a distinction between the two different kinds of businesses, right? Because, you could be an entrepreneur and a small business owner, and vice versa. But I think those are two very different paths, right? Small business owners, you usually have a cash register. You're stuck working in your business. You have trouble working on your business. Entrepreneurs are busy building things that can run without them at some point. But what do you think gets people stuck, gets people mired in these problems and trouble that cause them to need more funds or go out of business?
Sure. Well, needing more funds isn't always a problem. I want to make sure I make that distinction. As I started this business, I had to raise money. And as the business was growing, and I was excited about the prospect of the business, I needed more.
So you think it's okay to need money? Because a lot of people, I think, struggle with that too.
I do as well.
Yeah, do I capitalize? Do I need to go outside for investment?
Right.
Or do I just try and, grind it out until I've got enough revenue then to invest back into the business?
Sure. So money is often a restricting factor. And so, it's a necessary evil. Everybody deals with the stress. It's also something people don't love to talk about. I mean, of all the things we discuss, even with friends and family, it's not very common to go deep about our finances. We may superficially discuss things or complain about bills at a very high level, but we don't really get into it. We don't talk about how much is in our checking and savings account and where we are relative to where we need to be for our savings, for whether it's retirement or a child's education. And for small business, it's no different. People don't really like to talk about it. In terms of both entrepreneurs and small business owners, I think there are a few things. The first is, at least, and I speak from experience, self-doubt is normal and needs to be accepted. Yeah, I think it's good to confront that, and whether you talk it out with friends or you just kind of write things down for yourself, it's good to go through it, finances included. And because what it does is it shows the holes. When you put it down on paper or when you talk it out with someone, it becomes much clearer. When you have doubt about your ability to manage something, even financial, it may uncover the need for you to go speak, whether it's with an accountant or a financial advisor, or speak to a source of capital, even if it's a bank. Go talk to the bank. Even if you end up getting declined, the process is a phenomenal process for growth and learning.
So let's go back to the dirt bike story. So how do you know when that jump is, you can't land that jump? Where do you draw the line between the risk and reward? How do you know?
So that's a great question. And I think that it's a judgment call. So the way I would say it, the way I've described it to others, even people that work for me now, we can start with intuition and then gather the data, right, based on intuition. And then the data we gather will either prove or disprove our intuition. So to make the correlation back to the analogy here, sometimes I would make the jump and I would fall. The data would be that didn't work and I wouldn't do it again, right? And other times I would land quite easily and realize I could probably go faster or make the jump a little bigger. The same is true with business. With business, what I try to do is fall down as infrequently as possible. It's okay to fall down every now and then. Nobody is perfect, and that might get overused. All too often, I think both entrepreneurs and small business people, myself included, we have a tendency to have a vision for something and we want it to occur at the speed that we envision it. And that's rarely the case. And what I found through trial and error, collecting the data, proving and disproving intuition, is I've done best when I listen to the business and then respond accordingly, instead of taking my vision and forcing it onto my business with the belief that my business will react or respond accordingly.
Don't my future prospective clients know that my mortgage is due at the first of the month? Shouldn't they, sign the contracts and do business with me, when I need them to? Isn't that the way it should work? And what are the signals, right? So, this is something I think everyone struggles with: is how long do we give this great idea until we cut bait?
Right.
We may get feedback or criticism from family and friends. You're crazy to keep doing that. It's not working. What are some of the signals that it's not working, or flip it around, that it is?
Right. So I think growth is one, and you want to have. I write everything down. It's a practice of mine, because then I can always go back and refer to it. And so I look at, again, this point of I look at where I am today and then where I want to go. Now, where I am today moves every day, and where I want to go may evolve in kind. But that's a sign in itself. Where am I relative to where I was? And then, again, self-doubt. If you're open to the self-doubt and you look at pros and cons associated with either your progress or lack of progress, and you're honest with yourself, independent of whatever feedback you may get from others, you'll arrive at this place of, is this progressing? Again, patience is very important. It may not progress as quickly as you want, but if you're measuring everything and you're referring to these data points, you're going to see. I mean, the great thing about data is it doesn't lie and it doesn't have bias or opinion.
Yeah. Well, should you listen to some of these, people in your life, and to what extent, right? Like if you've got the vision for it, maybe you see the stepping stones to get to where you want to go, but others can't. I think this is some of the hardest, storms to weather, right?
So the way I went about it, when I had the idea for Reliant Funding, I didn't go to my friends or my family or even the people that I looked up to in business. I went to who I saw as my prospective client, and I spoke to them because I was less concerned with a demographic that wasn't going to use my product. I was much more concerned with who might want what I have, who would relate to this idea and be my client. If the feedback was negative from that group, it would have caused, at a minimum, it would have caused pause, and I could have reflected on the idea, maybe reworked it, and then gone back again for more feedback. Again, be honest with yourself. No idea is so amazing that it's going to work despite feedback from 360 degrees that it won't. But again, the people closest to you likely have a bias that isn't relative to the concept or the idea.
That's a super, super good point. I want to just make sure that we emphasize, because context is so important, right? I think you really have to be careful and consider the source. If the people in your life that are giving you negative feedback don't have the same kind of experience or track record, then you shouldn't give what they say very much weight. Right? I can remember, I love my father-in-law. He's a great man, but I remember my wife telling me this story of when she was, I think, a freshman or sophomore in high school, and he grew up in the '60s, and he's changed and evolved quite a bit since then, of course. But she said that he told her, make sure you take a lot of typing because you're going to need it when you're a secretary. Right. And she's like, what are you talking about? I'm going to run a company when he's the secretary. Right. But that was his mindset, right? So he was sort of stuck in an era where that's how they did it. And so I think we have to be very careful about taking or not taking the feedback of someone who doesn't have that kind of experience or track record.
That's true. And even if they have the experience of building businesses, if their target demographic was different, they don't know the context for the client you're going to. The flip side, though, is true, and I want to make this point, of positive reinforcement from people that want you to succeed or believe in you. They may have a bias toward encouraging you to do something that might not work. If you don't beta test with your demographic, you might be getting bad advice on either side of that spectrum, right? Someone that tries to hold you back or gives you negative feedback. Conversely, someone may push you, that's a great idea, you should go do it, because they believe in you, they like you, and they want to see you succeed, and they want you to pursue your dreams. But they have no idea whether or not it's a good concept.
So let's talk about creative funding, because when I started this production company business, I needed gear, and I couldn't get any help from the banks. I couldn't find creative sources. I couldn't go to friends and family. I just didn't have that resource. And so we had to grind it out and just put revenue back into the company, grow slowly. Right. There are some opportunities that I missed, I know, because I didn't have the funding to gear up for it. So what should we be looking for if we need creative funding? What are some of the sources? Obviously, you guys are one of them, but talk that through.
Sure. So, well, look, banks are an amazing source, right? And I still believe banks have a place, not just for the 20% that get approved in small business, but deposit accounts and for our personal lives, we all rely on banks, and so they're great.
20% is a number?
Yeah, bank approvals, large banks in particular, they're high teens to very, very low 20s. So as an average, it's about a 20% approval rate in a normalized economy. Right now, we're running at about a 23% approval rate for small business, all small business, from money center banks. And if you include regionals and credit unions and all of that, you're not significantly higher.
Okay, so we have a 77 to 80% chance of being rejected.
Correct.
Nice.
Correct. Yeah.
Okay, I don't feel so bad.
Right. But this has been the case for quite some time. So even when credit is loose or on the looser side, this is where we are. Maybe we're in the mid-20s for small businesses.
Yeah, and our credit was good. We just didn't have a track record.
Correct. Well, look, even with some of these creative sources, you need some kind of a track record just to show cash flow. But that might be 6 months, where a bank wants significantly more. Banks also are going to want pledged assets, personal guarantees, and then if things don't work out, you have seizing of assets. But the other problem for a small business owner, as you and I both know, is when you're pledging not only assets, but you're putting a personal guarantee on things, it goes against your ability to borrow elsewhere. So you may borrow for all the equipment we're using today, and then you want to get a car or you want to go buy a home. Well, they look at all the money that you borrowed for your business and they count that against you personally. And it's hard for a small business owner or an entrepreneur to take all of that on. Well, I sign constantly for everything. Even Reliant Funding, to this day, we have a revolving credit facility, right? All of that, it puts a lot of burden on us as entrepreneurs and small business owners. So I relate to this fact. The concept of some of these creative sources was to try to lighten that burden, to provide creative funding that didn't squeeze a small business owner. There is a place for banks, but when banks don't work, there are sources like merchant cash advance and alternative financial sources. There's even the SBA, which comes through banks, but comes with a different set of rules and circumstance, longer duration and different rate structure.
So what should I watch out for if I go get, a short-term loan or a long-term loan from a lender like you? What should I be on the lookout for?
So if you go for creative non-bank funding, it's always important to look at the terms, right? You should never go in unless it's black and white and it's been outlined.
What does black and white mean?
So for example, with Reliant Funding, we disclose everything. We talk about how much we're giving a client, the total of what they'll be repaying. Cost of capital is very clearly disclosed. And then we work on a small daily repay structure. And so the daily repayment structure is also disclosed. And then in aggregate, the amount of those daily repayments totaled up, disclosed. So you know how much you're getting, how much you're repaying, the delta between those two, what the payment looks like, and how the structure works.
I have a question. Yeah. So if, let's say I need $50,000 for new camera equipment, sure, should I then come and ask my lender for $50,000, or should I pad that a little bit and ask for 60, 75 or more?
Right, so it depends. Every business is different. In your instance, what a company like Reliant Funding would do is learn a little bit about what you're doing with that equipment once you receive it. So will it create more cash flow for you, right? And then will the opportunity require more cash flow? In other words, will you then have to market yourself in order to use that equipment to generate increased revenue? So we'll try to understand the story around the need, not just the need. That story around the need may lead us to recommend you take less money or may lead us to recommend you take more. Either way, the choice will be yours, but I don't think there's a simple answer to the question. It's what's the story around the need, and then the funding can be determined.
That makes a lot of sense. In our case, I was thinking about a scenario where after this, we actually are filming a documentary film. And so maybe if we're planning to gear up and we need to, we've already landed that project and we've got funding, it's sort of guaranteed. We just don't have the money yet, but we would maybe take the loan as interim to sort of float us through so we could actually start working before we got the paycheck, which, could come 30, 60, 90, 120 days later.
And that's right, and that's what we find often. It's you think of construction projects, they begin work before they receive payment. Right? Catering, same kind of thing. A restaurant may the space opens up next door, they may want to build it out. There's no additional revenue, but now they're paying rent on a space that's not creating revenue while they're doing work. So if the construction project is $20,000, but they need 3 months of rent and downtime, and then they're going to want to promote the grand opening, they might want to take more than $20,000. Conversely, if they know that in doing all of this, their revenue is going to be 60% higher than it was before, and that's going to ramp gradually, they may not need all of that money because the revenue will begin to come as they're spending. So again, we take the time, and I think that's one of the unique things about not only Reliant Funding, but some other alternative sources, is we don't want to just hear about the need, we want to hear about the story. And then rather than just making the client fit into our box, we're really trying to understand what their box looks like, and then we'll try to make our product, ultimately money, a commodity product, work for their need. It's going to be hard. Embrace that. I think all too often people want things to get easier. It doesn't necessarily get easier, right? Even as your business grows or evolves, I love the fact that every day when I come in, work is hard. I think when entrepreneurs or small business owners expect or hope that things are going to get easier, they begin this cycle of being discouraged, and it's easier to take on a negative bias. And that's not good as the person that really has to steer the ship through everything. Calm seas, rough seas, it doesn't matter. We need to maintain that air of positivity, not only for ourselves, but for our employees. So I think one of the mistakes that small business owners make is, when will this get easier? It won't, is the answer. But embrace that and love it. And you'll find that when things are difficult, you'll often look forward to the challenge of overcoming that difficulty and looking to what's the next challenge, overcoming that. And when you do that, your team gets behind you as well, and you end up having an entire team that embraces everything that comes their way with a smile on their face.